Hello and welcome to Hot Money on Bloomberg Quint Live, India's first digital live streaming business news service. This is a show which gets you a complete wrap of all the stocks that are buzzing in trade. I am Darshan Mehta. Let's welcome our experts then. Vinit Bolinjkar of Ventura Securities, Kalra of Target Investing, and Harihar of HRBV Client Solution. He's running a little late, but he will be here in a while. Today on Hot Money, we'll discuss the Jet Airways stock. What exactly should you do? We'll talk about the pharma space. Pharma as a place is buzzing in trade. We're in the midst of the earnings season, so we believe one stock that our experts are betting on that could outperform this time around, and a key theme that someone should play out in 2019. But let's start with the first stock, and that is Jet Airways. And a sudden crack has actually come in Jet Airways. Was up almost 5% in trade. It's come down to almost flat in trade. So there is and yesterday the counter was up almost 16% in trade. So a lot of news, lots of speculation. No one knows what exactly is happening. But on a pure fundamental basis, what should one do with Jet Airways? Are the valuations or compelling you to buy, or is the thought of an ownership change compelling you to buy, or would you stay away from the stock? So that's something that we'll ask. So Vinit, I'll start with you. All the news is out. No one knows what the truth is, but the truth is that Jet is in trouble. They are looking to get in Fusion. So there's a high possibility that the ownership may change. Given this scenario and then the price it is trading at, would you advise anyone to take a bet or a wager on Jet Airways?
So I wouldn't wager on Jet Airways. So a couple of reasons. One is that the debt is extremely too high. Okay, there is a forensic audit issue prevalent. Third thing is Jet has been losing market share. And even if the funding comes through, they're going to lose market share. So from 30%, they come to 14, and they're practically going to become invisible. So given these kind of constraints that are there, high debt businesses and tremendous competition in the segment, and if there was a slowdown in the segment, Jet would be impacted the most because it's financially extremely leveraged and very tender. So my view is to avoid that stock completely.
But if they get the infusion, why would their market share also crash by half?
So the fleet additions that are happening by the peers to keep pace with the growth in Indian traffic, domestic traffic, their Jet is not doing that.
Okay.
So they are doing a lease and sale and lease back. So they'll be adding one Boeing 737 every year. So that really does not materially impact their market share. So they'll be constrained by capacity.
Okay. So, and do you share a negative view on the entire aviation space, or it's only Jet? Or what's your view on the sector as such?
It's a more of a neutral view right now. So we'll want to see the loadings picking up, the capacity utilization going up, and that would be a single benchmark for me to play this trade. Okay,
so it's a clear avoid on Jet Airways at this point of time. Clearly the worst performer among the three listed aviation peers. Samir, would you agree? Would you also avoid Jet, or would you find this as an opportunity to buy?
So as an investment, I'll avoid it. There's a short-term trade of maybe going towards 350, 400 at a point because of these rumors and the news coming in. So because they have to do something, it's a situation where the promoter personal thing gets back on the seat, and then the whole company has to take over somewhere or the other, more rational approach. So I think on that it will help. Infusion will help out. But if you see, it's more of the person who's running the show is more important to the whole scheme. So I think and the fleet which they have is getting really old at that point, and it becomes very cost inefficient to control that kind of a fleet. On the ground, they have personal issues. They have the pilots resigning. They have a lot of security checks being flagged off. So operationally and financially, they are facing a lot of issues, and a simple equity infusion will not help them out. They have to hire someone operationally who can handle all this and overturn this. So I think that has to be the more important step than the infusion. But I think for an investment, it's better to stay away.
Okay, will the infusion help them? Will it be enough? That's what I'm asking. Because if reports are to be believed, and Etihad also has a cap, they can't go beyond 49%. So there is a matter of bringing the stake from 24% to 49%.
So
will that money be enough to get rid of a lot of debt and also help them on the operational side?
So I think what will happen if Etihad comes on board, the lenders will be much more eased off in revising the refinancing kind of a place, because a lot of debt, I think 80 to 85% is maturing by 21, FY21. So that's not far off. So that's the main concern. And I think the infusion will help out postpone this and give them a longer time, like a 23 or a 25, FY25. Till to the debt repayment, and there'll be much more easier lending restrictions over there once Etihad comes on board. But again, I'm saying the person who's in control of Jet after the infusion also, that person is the most important trigger to take it a overturn, because it will not be a very quick thing to come back to what levels they were. So I think it's a very hard call right now.
Okay, so that's the view on Jet Airways at this point of time. It's a clear avoid at this point of time from both of our experts. They believe Jet is not the story that you need to play. Anyway, the counter is extremely volatile in today's trade. The other fact that we want to talk about is the pharma space. Of late, pharma stocks have been doing well. Even the top-notch companies like Sun Pharma has been doing, and among the mid-cap companies, companies like Strides and the Sequent or Solara or all these companies, at least they have their themes and they are all playing out significantly in trade. So what's the view on the pharma space going ahead? We'll ask our guest. So Samir, I'll start with you. One stock in the pharma space that you think that could be investment worthy?
So I think I'm sticking to Sun Pharma in this space, and I've been sticking since past couple of years or more than that. So I think over there are certain corporate governance issues which have come in during the call also, relating to the loans to employees and all. But I think if you see operationally, even the recently yesterday when the $10 million trigger payment happened to Spark, that shows the products which they are getting approvals of and they are launching. Over there, certain kind of attraction is much faster than what market expects. And I think in Q3, Q4, there will be a better off numbers. It won't be that drastic change so that the valuations really go up. But I think now it's more of operational changes which they'll be able to handle and pass through much more swiftly.
You think they'll be able to do well in the specialty business? Because that's what the bet is on, because generics, there's nothing much left as such. Will they have the scale and ability to?
So I think generics for them is now a cash flow. So for them it's more like funding the specialty drugs. And if you see specialty drugs, they have quite a approval since the whole US FDA ban was kind of waived off. So over there, I think the approvals will be much more quicker, and they'll do really well in the specialty segments because they have picked especially derma on the side. Derma is a very high growth kind of a US system and segment. In that, even in the slowdowns or the pricings, they don't have that much of issue in the derma sector. So I think over there they'll be able to handle those pricings and get the benefit of it at much more quicker pace than estimates.
Okay, so that's the view Sun Pharma. What about you, Vinit? One pharma stock?
So we like Suven Pharma.
Okay.
So there are a couple of things that we like about it. One is that the optionality can kick in any time now.
Okay.
So if the Alzheimer's drug comes through successfully, then it's going to be a windfall, because there has not been any great success in Alzheimer research globally. Okay. Secondly, is there in the CRO space, and new chemical entity growth is very high.
Okay.
So you need APIs for that, and because they do bioequivalence studies, they provide raw material for the molecule discovery.
Okay.
They are best placed to grow from that.
Okay.
And another thing is that CROs are also becoming generic suppliers to these growth. So with the API industry going through a squeeze, okay, here you have a stock which is a CRO. Business will not get impacted even if Uncle Sam gets dirty. Two is they have an upside of API, and they have one drug on the anvil. So I think it's a very good stock. It may have rallied a bit, but it has been a slow mover. You know, over the last 2 years, it has compounded at 22-23%. But I think maybe a downside of $30 and significant upside and could become a multi-bagger.
Okay, so that's the view. Can you explain in more detail what this Alzheimer's drug can do for the company and what stage is it at?
So they're at their clinical trials will now be, their results will be announced anytime after March-June quarter. So I think that's a very bullish event, and it can lead to out licensing opportunity.
Okay.
And they can get good payments for milestone payments.
And how is it valued compared to the other companies in its peer group, and how are the financials doing?
So the PEG is 0.9, ROE is about 15%. It's not a, it's a very fairly valued company. There is upside to the stock.
Okay, so that's the view that's coming in. Two stocks that were discussed in the pharma space, Sun Pharma and Suven Life. So those are the stocks that were spoken about. We are in the midst of the earnings season, and we want to speak to our guest regarding some of the sectors that they believe could outperform this time around, and some key stocks that they're watching out because of purely on the basis of the third quarter performance. So Vinit, I'll start with you. Among your clients, which you must have sent some preview notes, or you must have indicated to them, which are the few stocks that you believe that you should watch out for the upside, not the downside, probably?
Yeah, so for the upside, we are extremely bullish on the gas space. Okay, because the kind of bidding that has gone in for the 9th and 10th round, it's preposterous.
Okay.
And these guys are not going to make money over the long term. And many of these could probably fold. But given the preposterous valuations and all these other stocks which have been the listed entities, they have not participated in the 9th and 10th round, materially. So I think that Gujarat Gas, which is at 80-90% discount to intrinsic value, gives you tremendous margin of safety with strong growth coming through, and there is value accretion also because now they've started hiking prices, and there is a significant differential to the EBITDA per SEM of MGL and IGL compared to Gujarat Gas.
Okay. So Gujarat Gas is something that you are watching out for. Samir, which is the stock that you are watching out for?
So I'm watching out for Oberoi Realty.
Okay.
Over there, if you see, Q3 will be important for them. The Commerce 2 tower, which came newly in 2018, that was around 65% leased out till Q2 end results. Now that has been around 98%. So that kind of annual income on the rental becomes now 350 crores for Oberoi, and now it will come on from Q3 to Q4. It will start coming out properly. And the second part which I like is the Sky City, which is the Borivali project. That is on the completion of 40 to 45. Last quarter it was around 28-30. So another 15% revenue recognition will hit the books. And that's around a 2400 crore project. So that comes out on the revenue. So Oberoi is now turning more consistent revenues and more consistent P&L than earlier it used to be lumpy. So I think in Q3 it will be a better off player on a quarter-on-quarter and a YOY basis.
Okay, are you concerned about the slowdown in real estate? That could also be a negative view for Oberoi, or is it insulated at this point of time?
So I think it's insulated in a certain sense that they are specifically opening bookings, and whatever bookings they are opening, they are able to push through that, and those are not financed at a certain point over there, and their quality projects are being sold at a higher pace and a higher rate within the whole area rates also. So I think they are better off over there.
Okay, that's the views coming. Hari, thanks for coming in. So we're discussing one stock that you're watching out because of the earnings season.
Yeah.
One stock you believe can outperform this earnings season. Which one would that be?
I think SBI would be my pick, and I think SBI could surprise in the next this quarter and probably the next quarter for a couple of reasons. One, I think the previous quarter we saw for the first time after 3 quarters there is a profit on SBI after 3 quarters of losses. So I think what it probably indicates is that there could be the kind of a bottoming out of NPS cycle that we could see in this quarter, and that could accentuate it as we go ahead. I think the second thing is that there is a huge NCLT recovery that is being expected now. So probably I think the total amount is about 1,10,000 crores. Around 18% of that is going to go to SBI. So about 20,000 crores is going to come into SBI. I think the third thing is the worry in the last 2 quarters was that they had taken a hit on the investment portfolio write-off. And I think with the yields now coming down from 8% to about 7.2%, I think some of that could actually get reversed. So I would believe that all these things actually put them in a very sweet spot. And if you add the fact that last if you look at the 21-day cycle that RBI follows for credit evaluation, the last 2 or 3 cycles have been very positive in terms of credit growth. So I think if we add up all these, I think SBI could probably be one stock where it could report a profit, and also I think in terms of PB valuation, the stock
What
looks
about
pretty
asset
good.
quality? Would that be an issue?
As I said, it's hard to take an overall view, but then broadly what we believe is that the NPA cycle should bottom. So I think that probably says it all. And SBI in a way is a proxy for India. Okay. So if India's asset quality is improving, I think SBI is improving. So if you look at it that way, I don't think there's much of an issue. But I don't think SBI has any kind of specific exposures like what a federal bank or a corporation bank would have to SMEs. So I don't think there is that kind of a problem. They are largely, I think, large projects, government projects and big corporates. So that should not be much of an issue. I think as long as NPA doesn't deteriorate, and we don't see that happening, with NCLT recoveries, we don't see NPAs deteriorating. I think as far as NPAs kind of bottom out at these levels, I would believe that SBI should be in a good position.
Okay, and before we ask the other guest of the first 2 questions, what's your view on Jet Airways? Would you buy or would you avoid at this level?
No, see, we were actually playing Jet as a trade sometime back purely because of the Etihad deal. But with the stock up, I think about 25 to 30% in the last 3 or 4 days, I think the short term, I would say the attraction of the stock seems to have gone out. Let's not forget that even if Etihad comes in with a 49% stake and, Naresh Goyal reduces his stake, there is still a big question mark over the negative gap between the RASK and the CASK that, Jet Airways still has to contend with. And we are at a situation where oil is at probably $62 and there have been 2 continuous cuts as far as the ATF is concerned. Despite that, if Jet Airways is struggling, I think there is a larger question they have on the business model. So they may have to rethink their business model, probably reposition themselves as the low-cost airlines like the others, the Indigo and SpiceJet. I think that could probably make some difference. But at this point of time, I think the RASK-CASK gap is too negative for them to be profitable. So I think whatever the sentimental benefit they got, that is already factored into 30% hike. So we wouldn't really buy Jet at these levels.
And what about the pharma pick that you believe that you're pushing to your clients?
See, we have traditionally liked Star quite a bit, the Shasun group company. And this is a company that actually acquired the Australian generic manufacturer about 3 or 4 months back. And this gives it a very, very strong positioning. Now, the good point about Shasun is that it is not exactly, vulnerable to the FDA cycles, the US margin compression, the way probably a Reddy Labs or a Sun Pharma or a Lupin is. So to that extent, I think it's a lot more insulated. And also, I think the stock corrected from about 700 down to about 380. Now it's probably about 500. I think the downside risk at these levels is quite low. So we would probably look at Star more as a kind of a promising earnings surprise on the positive side.
Okay, so that's the view that's coming in. Vinit, before I move on, Gujarat Gas is up 15%. Any reason? I think one of the brokerage notes that came out indicated that they've taken a price cut of 1.5 rupees per SCM as of today. If we can have Gujarat Gas up on it, how does this impact? Any view on Gujarat Gas?
No, so it's all an adjustment. It depends in which segment they've taken a cut. If it's in the industrial or the PNG,
on the industrial.
Yeah, so they would be seeing a little bit of slowdown. So their main aim is to push through quantity,
Okay.
And there could possibly be a cut in their costing also. So they would be passing it on.
Okay, so that's the view on Gujarat Gas. And finally, before we wrap, the key theme that we're asking should be played for in 2019, can be a sector, can be a trend that they're spotting. So Samir, what's the key theme that you've asked your clients to play for 2019?
So I think for us it's real estate sector.
Okay.
Over there, if you see the unit wise, the inventory is coming down by 20-21% YOY, and the sales are going up by 10 to 11%. So over there's a switch of new launches and being reduced as per the new sales which are coming in. So I think this trend, if continues by second half 2019, there will be a lot of residential supply situation which will ease off. And I think over there will be certain pockets where price increases will kick in, and that will be better off for real estate companies out there.
So which are apart from Oberoi, which are the other companies that benefit?
So we have DLF in our watch list right now. We have not started in because we want them to have a debt-free status, and they are almost there through the GIC deal which they had. So I think over there, and the residential, if you see, NCR is having a 4 to 5% of a price increase already in the system. And over there, I think DLF will be able to get benefit because the smaller developers or mid-sized developers are facing the issue of the RERA and the completion costs. And especially when the NBFC have squeezed them, they are not able to sell any flats because the construction costs is not able to be borne by the developer. So I think over there DLF is one of our plays.
Okay, Vinit, what's the theme that you are playing?
So we like the API theme.
Okay.
Okay, so there are a couple of issues that are happening. So India imports about 60% of its API requirements from China. And China has been facing severe quality and FDA issues from the US. So we are seeing a market move out of China and possibly India, people ramping up to grow. Second thing is there is a very strong global move towards consolidation. So there were 45 players in the generic space. They've narrowed down to 7. And in India, we have about 250 manufacturers, of which there are 50 quality people. So, there's a huge upside out here. So, as I spoke to you about Suven also, that they're getting also into generic. So, the CROs getting into generic APIs. I believe that any player who can get the stock right can really, really do well. You have to sift for these kind of stocks, and we are in the process of identifying stocks, so I would refrain from mentioning any stock right now.
Okay. The other part is when did this China issue happen, and how much % is likely to shift to India?
So that's a very difficult call to take because the data is not available. But like we have seen in other industries like chemicals and like the graphite story that played out in HEG, this can be a larger shift because it not only involves purely the supply of the material, dynamics, but it also has regulatory implications. So if something gets shut down in the China for regulation, then it takes a while for the entire operations to come up. So in that way, people in the manufacturers in India will benefit because the domestic story is strong. When you're importing 60% of your production and basic ingredients, so we are actually hostage to China. So government also wants to retract on that. Second is, so this presents you an opportunity not only in the domestic market but also from a global supply facility that India can become.
Okay, so Vinit didn't want to name some stocks, but just for the perspective, and this is not a recommendation, some of the companies which manufacture API in India include the largest is obviously DV's Lab is the largest, but of late a lot of other companies like a Laurus Labs or a Solara or a Hykel or an IOL Pharma, all these companies have actually buzzed or moved up on this key theme that is there. So watch out for some of these counters and study them before you take any kind of investment decision. And Hari, what's the key theme that you're betting on this time around?
Well, we're actually looking at two themes. The first is what I call a more generic theme, which is consumption, and where we are looking at with specific focus on the food and the FMCG space. Now, our logic is that apart from an improvement in income levels in urban and semi-urban areas, there is a very massive 230,000 crore farm rescue package that's being planned. Now, whether it happens now, whether it happens in the next 2 months, I think most likely it's going to happen before the elections. Now, that could actually trigger a massive demand for most of these FMCG products. So we it could include probably two-wheelers, it could include FMCG products, it could include food products. So the entire FMCG space, despite whatever rich valuations we keep complaining about, I think that is one space that could be a kind of a straightforward game in the coming year. A slightly more, I think, convoluted game could be capital goods, because we believe that we have been talking about a capital cycle revival for a long time, and finally I think we are having a situation where capacities are now going up beyond 75%. New capacities will be required, and that will lead to capital expenditure, factory expansion. I think that could start happening. So we like L&T as a kind of a proxy with the capital goods revival in this coming year.
Okay, so that's the view that's coming in, capital good theme as well as the consumption theme that is there. So before we end the show, the only media company to come out with numbers today is Zee Entertainment, and they will report their earnings today. A healthy growth in both advertising revenues and subscription may aid the numbers as the company continues to spend on digital. Sharad Dubey joins us with what the markets are pricing in. Sharad, what do we have?
The only media company on the Nifty 50, Zee Entertainment, will come out with its third quarter numbers today. A higher market share in select regions like Tamil, Marathi and Odia, and higher penetration of its on-demand video platform ZEE5 is expected to aid the top line. Revenue is seen growing by around 13% versus the same period last year. A higher advertisement and higher subscription is expected to aid margins. The company has already said that it's charging higher ad rates, which in comparison to a drop last year will push up the bottom line as well. Innovation and higher marketing spends may push up expenditure, especially in the digital space. The management's statement on the new tariff regulation will be a crucial thing to watch out for.
Okay, with that, it's a wrap on today's edition of Hot Money. Thank you to all of my guests, Hari, Vinit, Sami, thank you so much for coming in. Ask BQ comes up next. Stay tuned to Bloomberg Quint.
Delegate